All right. So, hi, everyone. Thanks for joining the Swoop Off the Charts series. We have Hillary here, our virtual CFO, a partner of Swoop from the very start of our journey here in Australia. So thank you, Hillary, for, spending a few minutes with us talking about the most popular thing, I guess, debunking common end of financial year myths. Before we get started, do you want to give us a little bit of brief in terms of, what you do, how long you've been in the industry for?
Yeah, sure. Thanks, Cynthia, and thanks for having me. I run a business called Titian Consulting, and we offer virtual CFO services to small and growing businesses. So we fill that space between your bookkeeper and your tax accountant and helping you with everything in between.
Awesome. Fantastic. And what's probably the most, in your time as a virtual CFO, what have you kind of come across as like popular questions that you've gotten yourself?
I think there's a couple of things that jump to mind straight away. Number one is cash flow, and number two is what do I owe the ATO? And they're both intrinsically linked, obviously. So I think there's always a bit of a surprise about, well, how do I know what cash I'm going to have? And then the second one is, what am I going to owe for the next past quarter? And when you use accounting software, be it Xero or QuickBooks or whatever, all the information is there. So it's just about helping people learn about how to go self-serve and find out the answers to their own questions.
Right. And does that mean that you can log into their ATO account on their behalf and do all of that for them?
Oh, yeah, absolutely. So I am a BAS agent. I'm not a tax agent, though. So I do have access to the ATO portals for people. But if you have your accounting software up to date, your accounting software will tell you what you owe at any one time. So it's just about making sure that you're doing everything properly in your books. And then that'll give you all the information you need. For example, if you need to go and find some working capital with Swoop or something like that, because all the information is there. You don't need to have a spreadsheet somewhere else or look at your ATO portal separately.
Wow. Okay. Fantastic. All right. So that kind of really simplifies that process for business owners, especially during, this end of financial year and leading into the new financial years. SME should really start preparing for the close of it, really. And now come tax time there, Hillary, your clients will probably keep you on speed dial. But do you have all the information, including other areas of their business, on hand as well? Will you have access to not just their accounting software, but all, their internal system as a virtual CFO?
Yeah, absolutely. So I don't do tax returns because I'm not a tax agent, but I work with my clients to say, okay, where are we at? For example, we're coming up to this hard close of Thursday, which is, it's ridiculous, but it's the way it is.
Yeah.
So it's all about that planning, going, where are we at? Where are we going to land? And how can we plan for that? And what does that mean when the tax accountant does the tax return? It's about getting ready for what that surprise or shock might be, or saying, well, how can we lessen that impact? Do we want to take some profit out of the business, or do we need to? Do we not have any money? Is that a problem? Do we look at funding? Or can we accelerate or postpone some business decisions to get the outcome that we need?
Okay. And for a business owner that is time poor and, probably only has a lunchtime to have a conversation with you, how do you kind of help them be more efficient with their finances? Or what are your tips around that?
I think it's about having some strong reporting in place, and that doesn't have to be a big deal, because you can streamline processes really well. You can use additional software. I use a bunch of different software that takes information out of Xero, for example, like you guys do, to have a look at where things have been and where they're likely to go. And then it's just by dropping in some key metrics, which could be same revenue or revenue slightly growing, or same cost base or cost slightly lower because the salaries have dropped, and seeing what that's going to roll out as and what that's going to look like, be it at a profitability level or at a cash level. Because really, businesses are more bothered about cash. They're not that bothered about the accounting profit that they're left with at the end of the day. It's going, can I cover my future working capital needs? Can I cover my current debts? Can I cover my payroll on Thursday? It's really about that kind of thing, I think, and about how to give them the confidence about to know how they can cover that stuff.
Yeah. All right. Well, leading into debunking common end of financial year myths, what's on the end of financial year checklist, and what's a myth and what's the truth, I guess?
So for me, there's two strands to this. We have the regular compliance stuff, which is the real grunt work, which, we're not that excited about. But that's our payroll year end, which we have to do by middle of July. Tax year end needs to all be filed by October, but that's not me, so I'm not that bothered about it. But then we have our June BAS as well, and that's due by the end of July. So depending on the size of your payroll year end can be quite tricky. So they're just the bits and pieces that we just have to get done. We don't have a choice about them. Mm-hmm. But then for the other things, it's more about that planning and going, where are we going to land, and what does that mean for next year? And one thing that I think is a myth personally, but some people kind of love it, is it's that business of, if we have money, can we spend it now to make our tax bill smaller in the future? Which I only agree with if you need something. So it could be, for example, someone says, oh, but I've got to go spend, and the tax office gives you a 20 grand break for buying a piece of equipment or an asset. That's only realistic if you need that asset. There's no point spending 20 grand now to save 20 grand tax bill that you may or may not have. I just think it's not the right way of thinking about things. It's like, what's your business? What does your business need? Do you need to do it now? And do you benefit if you accelerate that decision? So whilst it's a truth, Cynthia, I kind of think it's a bit of a myth to just spend money to save giving the ATO money.
Yeah, that's true. What are your thoughts on then the instant asset write-off that all lenders...
This is what I'm talking about. So that's fine, but you have to spend that money to get that write-off.
Right.
So you've got to physically spend the money to get that tax break on that asset, right? Mm-hmm. So I'm like, well, only do it if you really, really need it. Don't do it just for the sake of, will I get a tax break? Because would you be better off keeping the money in the business for something you really need in 6 months' time? Have you planned for that? You know what it looks like? Or do you really, really need the asset? And if you need it, and now's the right time to do it, and you are better off buying it on the 30th of June rather than the 1st of July because you get that tax break, that makes sense. But just going for the sake of it because it's a tax break, I think you need to pause on that one and just really assess what your objectives are.
Yeah, like just buying a brand new laptop for the sake of buying a brand new laptop.
Yeah, exactly. It's like, well, if you need one, fine. And it's really only this false deadline of Thursday, right? Where you go, if I need one, you probably are better off buying it before Thursday than buying it after Thursday, because you will reduce your tax bill this year because of it. But remember, you're only reducing it by your income tax rate on the total cost of the asset. So if the asset's $2,000 and your tax rate's 25%, let's make it easy for ourselves, then that's only going to be a $500 saving on your tax. But you still have to spend $2,000 to get a $500 saving. And that's the disconnect that some people have.
Yeah, because I just think that they'll be getting a lot more savings and recuperate.
No, it's just the tax difference. You spent the money, but it's just the tax it's the tax rate on what you've spent that gives you that saving. Right? So, but you're still spending the $2,000 up front.
Interesting. Okay, learning something new every day. And what are some of the new legislations and regulations that's coming in place in the new financial year?
So there's a couple of things that have sprung to mind for this one, Cynthia. And number one is STP Phase 2, which for those of us that, we're close with, that's fine. That's single touch payroll Phase 2. So if you're with accounting package like Xero, you don't need to do anything because you're going to be compliant because you're already with them. They have a deferral to the end of this year. They've agreed that with the ATO. They're running out the back end development work to make everything work, which is basically their payroll talking to the ATO in the way that the ATO needs it. So there's no action required. But that's with a provider like Xero. I don't know about MyOb or others because I only work with Xero. So that's the first one that's happening from the 1st of July. And the second one that's happening is super rates go up. So I don't know if you remember, Cynthia, last year super rates went up from 9.5% to 10%.
Yeah.
And from the 1st of July, which means the first payroll that gets paid from Friday, if it gets paid on Friday, it goes up. It goes up by another 0.5 of 8%, which means it's going to go up 10.5%. So that's another 50 basis points of an increase on your salary costs. If you haven't got it set up that the base salary comes down because the super goes up, but it's about how you've written your contracts with your employees. Again, your accounting software will just do that automatically for you, assuming you've set everyone up correctly in payroll, and not everyone does.
Yeah.
So that is something to watch out for, because that you absolutely have to do that.
Yikes. It would be a nightmare for me to kind of prepare that. How would you What are some of your advice in terms of preparing for that increase in super? What can they do to make more room for it?
So one thing that I talk to people about is if you've written your contract to say your gross package, Cynthia, is $100,000 inclusive of superannuation, that means the whole package is $100,000. So if super goes up, it implies that your base will go down. Now, it's not significant. It's like literally a couple of dollars every week or every month. But that's how your contract is worded. So your employer would be entitled to do that. So their costs don't change. Your money doesn't change either, Cynthia, because you're still getting money, but you're just getting some of it deferred to your super fund instead of directly to you. If your contracts are written to say gross salary is X plus super at the prevailing rate, then you don't have a choice. The super goes up and your expenses goes up. And that's it. But it is because this increase is going to continue until 2024, until we get to 12%, it's something to think about future hires, about how you want to word that and how you want to prepare for that in the future, because you'll have to grandfather existing agreements with staff if it's written in the wrong way.
Right. Wow, that's going to be obviously a new business focus area for some businesses, especially if they've done it that way. What are some other focus areas you think that are important in the new year?
I think it's about how people have been recovering from the famous COVIDs. And, we've all talked about pivoting and how people have been changing their business models. I know we all know about the pressure that's on every business in terms of staff and labor. So I think it's about how you plan for that. And if you've pivoted, is that still working for you and how are you going? But if you're continuing the same role or in the same route, do you need more staff and where are they going to come from? And how hard is it going to be to attract and retain them? Because that's the biggest pressure that I'm seeing and that my clients are seeing. Yeah.
Okay. And then probably just to finish off there, Hilary, how do we look at streamlining the end of financial year process for the next year?
I think for me, it's about just constantly working on this stuff. So with my team, we always do quarterly check-ins to check that all the balances in the books for staff for clients are where they should be, rather than wait till year end and discovering a bit of a mess. So I think it's just that constant making sure your books are up to date, talking to your advisor and your bookkeeper, and just checking in about how are things tracking and are the books showing what you think they're showing, and just being constantly on it.
Yeah. Like realistically, how often should we be booking, meetings with our virtual CFOs or with our accountants? Should it be like once a fortnight, once a month?
No, I mean, you don't. I think it depends on the business owner, and I think the complexity of the business. So for some of my clients, we have a quarterly check-in, and for others, it's monthly. And I think it just depends on what your particular needs are. Some people just prefer to have that more regular contact to say, right, okay, where are we up to? Because it's about, how comfortable you are with your numbers and if you're happy to just let it go. So I think it really depends on you. For me personally, I'd be a monthly kind of a person. It's like when I check in with my marketing guru. So it just depends, but it is important to make sure that you are looking at your books and that what is happening is what you think is happening, not that they're not just two separate things. Like this is happening over here and you've got your spreadsheet over there. That's the worst place to be in.
All right. Well, that kind of wraps it up. 10 minutes, quick chat, in terms of end of financial year myths and truths. I really appreciate all the new learnings that I've gotten out of this, Hilary. Thank you again for your time and hope to see everybody else next time.
Thanks so much, Cynthia. Great to be here.
All right. Thank you.